Ladies and gentlemen, welcome to the Midday Market Monitor. And it's a pretty good day to be monitoring these markets because we have Nvidia stock, Palantir stock almost up 30% on the day. Hopefully it continues to climb up above 30%, but right now only up a measly 29.5%. Palantir stock is now at 162.73 after a major blowout quarter, grew by 93% year over year, crushing the estimates, raising guidance expectations, beating on both the top and the bottom line, and much more to cover. We'll not only have a review of the overall earnings, some guests on that will also give us a better understanding of Palantir's quarter, but then we'll also get ready for AMD and SpaceX, which should be very exciting as well. How is everyone doing? It is an exciting, crazy week, as I'm Beneficial says in the chat. And oh my gosh, on this Palantir price, am I right? We've had an opportunity to buy it like $106, like recently. Like you're talking June 25th to now. You've had to do like a month and a week, 5 weeks, and you're coming up on almost 50% since that point, maybe a little bit less, but yeah, 49.25%. I mean, pretty much there. But Palantir is not the only one. Air Test Systems up 19.8, Coherent up 16.5, ARM up 15.4, SanDisk, which we're going to have earnings on Wednesday, up 11.7%. Intel also up double digits. Lumentum up 10%. I have to ask, where is the stock draft today? Wow. It's looking good. Close competition. But I do have Palantir in my draft. So we're coming back quick. So it's me and Matt, both green, up roughly Matt's up 3%. I'm up 2.7%. Steve down just a little bit, but practically break even. And then Chris down 9.5%, Amit down 13.7%, and Jason down 14%. But yeah, look at that huge jump just from Palantir. So we've had a major earnings win here. Microsoft obviously being an amazing name. Palantir just dominated. So got both of those names. But on top of that, we still have names like Hood that are down, Vertiv. If the AI trade continues to go in that direction, those companies will climb back up as well. But Vertiv did show off earnings. This is really the name that, if anything is getting ready to get cut in my portfolio, it's going to be Vertiv. I'll take the loss, purchase something that I think might have a little bit more upside. I'd be looking to potentially swap it with someone, maybe get some CoreWeave, something like this. But because Steve owns CoreWeave right now. But buy into names that I think will have continuous good earnings, and I think Vertiv will as well. But remember, this is a trading game. So, you have to buy the names that you think are going to run within the next couple of months. Vertiv, obviously, with the lackluster earnings, maybe going to be a little bit harder to do that. And then on the other side, obviously, we did well on Microsoft and Palantir, and Mercado Libre, I think, is actually showing off earnings. The earnings as of the last little bit have been a little bit hard to swallow. The market has really punished them for showing off what I believed were unbelievable earnings, but increasing in expenses as they believe that there's a bigger opportunity to go after. So they're pushing their chips in and saying, hey, we believe in this, and let's really bet on that. But Mercado Libre could head a lot higher if they end up maybe drawing back some of those expenses. That could be honestly one of our biggest winners. And then obviously Rubrik, this company was up 26% before. It's been irrationally selling off. I'll likely see, SMCI, Lumentum, and Rubrik head much higher than where we are today. But ladies and gentlemen, oh yeah, look at this. Look at the S&P 500 right now. Oh my gosh. 77.34 on the S&P 500. If only Leopold could have held on for just a little bit longer. God, he really hit the bottom. Citadel and their nasty tricks. But yeah, that's up another 1.8%. NASDAQ up 2.4%, bringing the S&P to all-time highs. Congratulations, seriously. You have to give yourself a pat on the back if you've been a long-term investor and not capitulating. Like retail investors, as of most recently, have been the largest capitulator, more than institutional investors. The biggest sell-off that retail has seen since 2022. It's almost like we're really good at timing the bottom, but not in buying, in selling. When the fear gets so high in some of these sectors that people start to worry, and they say, hey, we're going to be able to buy in 20% lower, 40% lower. I'm going to get out now. You have to be careful. You have to be careful about how quickly people like Trump that do watch the stock market can end up saying, okay, we have to come to some sort of resolution. Oil prices are rising too quick. The stock market's having a terrible reaction. And obviously that has been a gauge of his sentiment. He looks to that and saying, okay, well, how much are people liking what I'm saying? And if the stock market's going down, well, he might end up turning course. So oil prices, as they talk about opening the Strait of Hormuz and coming to these sort of deals, oil prices are starting to fall below that $80+ range, back into the mid 70s, and the markets are obviously ripping on that news. But not only that, like, it's not just about the S&P's numbers based on oil prices. We are seeing earnings beat Wall Street expectations 85% of the time. I said this yesterday. Then the report came out today. It was 85%. I said, it's probably going to be like 80, 85. It was on the upper side of what I said. Whenever you have, that's of the S&P 500, not individual sectors. That includes McDonald's and all of these companies that might not be hitting their numbers. And, on the other end, you have the Googles and Microsofts and all of these companies that are crushing their numbers. Palantir, for which they're also part of the NASDAQ 100 and the S&P, and now they're up 30%. Not an all-time high for Palantir just yet. We've got a little bit of ways away. But the most interesting part about the run-up that we're seeing in Palantir was the upgrades from Wall Street. Wall Street actually looked at Palantir and said, hey, you know what? This company can be pricey. PEs can be, over 100 times. And mind you, that ended up slipping below 100 times whenever the numbers actually got released. But then now that the stock is up 30%, then, well, it's hard to contract your multiple whenever the stock actually appreciates on what you're saying. But that's good. That's good for investors. That's what you want. Overall, Palantir Wall Street analysts essentially looked at this company and said, we don't see a reason why the stock price should be anything lower than $200 a share, which is still, a decent a ways from where it is now. And literally here, let me pull this up for you guys. You can see this here. So I'm looking all the way to, see this one, $70 to $80. Wow, thanks, Brent. You're doing a good job. I don't know how you've been holding up at 3.5 star, but that was yesterday, or sorry, the day before. The people who actually did reiterate today have all put 220, 255, 200, 200, 215, 200, 205, 200, 225, 230. It's almost like a consensus. In fact, that is the average price, $200, 23% upside based on what we just ended up seeing. All right. Not everyone's happy. Brent Thill can put an $80 price target, but he still raised it from 70. You can't you can't be completely bearish. Overall, though, great report. Absolutely great. Expensive, but maybe worth it whenever you're growing 93% and put a target on essentially growing 149% or whatever it was. Okay. We also have earnings today. AMD, SpaceX. What else do we have? Zeta, that's another massive one. Open Door, Kratos, Upstart, Pinterest, Toast, Copang, Arista Networks, TMDX, Transmedics, Booking Holdings, Lucid. It's packed. Astera Labs. So, very, very, very big story here for you know, the markets. Okay, let's go ahead and check out some of the other news that we ended up seeing. Dude, this Bending Spoons company is super interesting. Bending Spoons, which is the, I've told you guys many times I'm using the software StreamYard. There's this company called Bending Spoons that actually acquired StreamYard. They acquired Evernote and Eventbrite and, all of these different businesses that you would say were like extremely popular back in the day. That they're not necessarily the biggest companies in the world today, but they still obviously have a ton of customers and are making a ton of profit. Well, Bending Spoons just bought another one of those names, Airtable. Definitely continuing to be used. Big company. $1.3 billion acquisition of Airtable from Bending Spoons. This is now a public company. That's why I'm bringing it up. What is their BSP is the ticker. Stock is sort of flat on the day, a little bit down. But yeah, market cap of 22 billion, and they almost like roll up all of these little businesses. Well, I say little, I mean multi-billion-dollar businesses. But look at the list of companies that they've done this with recently. Pretty wild, actually. Splice, Vimeo, Brightcove, StreamYard, Meetup, WeTransfer, Eventbrite, AOL, Mosaic Group, now Airtable. Like just so many of these names that you've probably have used in the past. What do you think of Zeta tonight? It could be very, very interesting. I'm very excited to see their report. Okay. And SpaceX. This will be SpaceX's first quarter that they've ever reported. I'm just interested to know what they'll even be covering. Are they going to give us sort of near-term or medium-term guidance? Are they going to reiterate timelines on things like their V3 satellites? The initial report at the IPO roadshow was, second half of 2026. Is that still the call now? BSP IPO'd at 29. Well, today they're almost $36, so decent so far. Okay. How is your short position on SoFi? Are you talking to me or someone else? Long SoFi is one of the biggest positions that I have in my portfolio. It's the opposite of a short position. I just interviewed the CEO. You think that he's interviewing with somebody who's shorting his company? Did you buy enough Palantir in your personal account? I mean, enough is never enough. I definitely didn't buy enough, but I bought every last dollar I had. I mean, I'm out of cash. So, yeah, it's my account is doing extremely well today. Very, very happy with my Palantir position. But obviously, hindsight's 2020. Before a 30% run up, I probably should have sold everything I had and gone into Palantir. If I knew it was going to go up 30%, I wouldn't even be a shareholder of NVIDIA right now. I would be taking small profits. Well, KK, that's what separates you from me, my friend. I see an unbelievable quarter, and then you want me to trim on that. You're the type of guy or lady, I guess KK could be a girl, that I'm not going to yell at. But you're the type of girl that freaking sells your winners and buys your losers, okay? I don't trim my flowers to water my weeds. I double down on Palantir. I'm closer to buying at these prices than selling. If there's one thing you want from me that you know you're going to get, it's diamond hands. My bad. I thought you were a SoFi bear. Dude, I've been making SoFi content for years. I'm like the last bull remaining. I don't like everything that they do. I'm not like a permabull. I'm not a permabull on any of the names that I hold. Maybe aside from Shopify or something like this. But yeah, I don't sell. Okay. Now, let's see. You're like the SoFi OG content creator? Well, that's very nice. There were some people definitely before me, but not all of them have diamond hands. Did you pay the guy back from last night for the $100? Well, he gave me $200, and no, I didn't, because he didn't send me an email. I'm pretty sure his name was Monster, right? Hopefully he's in chat. I bullied a guy. For anyone that didn't see it, there was someone watching the stream yesterday who said they have like 29,000 shares of Palantir 2X leveraged ETF. And then he told me that by donating me $10. And I was like, you cheap fuck. You have 29,000 shares? So you donated me $200. And then everyone was like, dude, you have to donate that to charity. No, it's my money, and I'm going to use it to buy more stock. Charity. The charity of Tanner Manson. I'm going to buy another Palantir share. And I honestly hope I have to pay $200. I hope we get there. Okay. But if he does want his money back, I'll send it to him. If he's just sending it for the joke, that's fine. All right. There was actually a clip with Alex Karp in it that I wanted to have a listen to. Let's go ahead and listen to this interview with Alex Karp after last night's earnings.
I'm joined by Palantir CEO Alex Karp. Alex, thank you for your time. Great to be here at your DC office.
I'm happy to be here. Happy to have you.
1 month ago, you launched a viral debate around the open source versus closed sourced AI model. What's best for a company?
By the way, that's not the revolution that we launched. That is a part of the revolution.
Since you came on.
No, that's not the revolution. The revolution we launched was sovereign AI, and the open weight is a component of that. But the sovereign AI revolution really is about you create value, you keep the value, and we don't care what tools you use. So, of course, we are a large supporter, one of the early supporters of this letter that was organized by our partner, Jensen Huang. And that's a very, very important part of this, so that that enterprises can control the weights of their model. But at the end of the day, what we care about is from beginning to end, our partners get to control the value, their alpha, meaning what they create stays with them. What has made their business, their expertise of their business. So you could think of this as pure intelligence and expertise. Expertise meaning this is how you create value in an enterprise. That has to stay with the enterprise, whether it's on the battlefield or commercially. And that revolution, which I think really was launched together, has changed how American enterprise views the landscape. And again, what every enterprise we interact with, and that includes some of the biggest and most important government enterprises in the world, is saying, why would we token max, pay people for something that's not useful, and then not control the means that allow us to advance our business while keeping the value of the business inside? and you see the results, partly because we were the first business to actually capture value at scale for ourselves and then transfer it to our partners. We grew our business 93%, 9-3.
Better than what analysts were expecting.
Okay, that's not
consensus.
Okay, great. Forget consensus. No business, to my knowledge, no business is at our scale has even grown half this much. We grew 85% last quarter, or like that was crazy. 93% is like a revolution. So by the way, and then you would say, is the revolution growing in a way that's profitable? Our adjusted free cash flow margins are at 63%. Our rule of 40 is 155. The US business, the business that really counts, we are at massive scale. We grew 115%, 115%. The first thing that any normal person does is spit out their dentures. And after they spit out their dentures, they turn the numbers to see if these numbers are even possible. And then then the question is, can this business grow at this rate? Can the business grow at a greater than 100% for the next 18 months? And what you see in both the sovereign demand for our product, the product offering, our alliances, both that compute all the way up, including helping to open up the world to being receptive to open weight models and their fine-tuning, beginning to fine-tune these models so the models work at Frontier, is a business unlike any other business that is poised to grow with these margins and with this revenue growth for another 18 months.
So the response has been very positive since 4 weeks ago when you talked about.
Really quick, I just want to touch on what he said. It is unbelievable. Like, I see a comment saying cocky or something like this. The level in which he grew this company is unheard of. Net dollar retentions of 157. I literally think that might be a record. I don't remember any other company that's ever done that, ever in my life of SaaS companies at this scale. There's not a chance, you know? And the fact that he's saying we're going to continue to accelerate it. And then whenever you go ahead and you look at Wall Street expectations, so we can do this on, we can sort of recreate this on Fiscal AI. Let's have a look. I'm just bringing it to quarterly really quick. So he's saying that he's going to hold up roughly the growth rate that they've seen in US commercial, which is like 149%. That's what he's pushing the team to do. Wall Street immediately next quarter has the company growing at 69%. The quarter after that, 62, 49, down to 37, then back up to 44. The difference in what Wall Street is seeing versus what Alex Karp is telling you is going to happen is so far off. The current expectations from Wall Street is lower than what Palantir put in their guidance report on the call. Okay, that's the level of outperformance that Palantir is showing here. People said that they were going to do 80%. That's what Wall Street guided for. They did 93%. And then people tell you to trim this company because it's up today. I think the market's realizing that all of these numbers are extremely inaccurate. That Alex Karp can, and the team behind it can put up the greatest software report ever in history. And that was being speculated last quarter, but this quarter I think is the guarantee. You know, whenever you take the rule of 40, which I've got it here. This is where, you know, they're guiding towards, you know, big sell-off. But let's go to what we actually know. Last quarter, 145. This quarter, 155. Like a 10% increase off one of the greatest reports ever seen in history. The rule of 40 was designed to show exceptional software companies that can grow and put up margins that the combined rate would equal 40%. They just did 155%. That's, you know, we're getting on close to 4x the rate. And a company that's 4x the size is very different than a company that's growing 4x the rate. Growing 4x the rate means if you compound that over multiple years, you're not going to be a 4 times bigger company by growing 4 times larger. No, there's compounding effects to that. right? So you're going to be 16 times larger in the next couple of years because the 4 grows on top of the 4, grows on top of the 4, you know. So the fact that they continue to not only put up this number, but are still accelerating it, like we've not even seen the peak of their performance and their margin. We don't even know where this margin settles out at. The quote unquote cockiness, as people said in the report, it's like, if I had a company growing at this level, you wouldn't even be able to talk to me like I was a human. So I think that it's the disrespect in his company and all of these things that he continues to have to face every day. And he's like, guys, look, this is we are making the next Microsoft. And in every quarter that we show up, it's putting it out of question that you can argue these numbers. Anyway, let's continue.
The AI sovereignty debate, customers have been responding positively.
No, okay, that you're using a frame of analysts are happy, customers. This is a revolution. Okay. This is not happy is when you come home and have a nice conversation with your partner. This is much more like you come home and your house is a castle and you're flying through the air in your car. Like, this is a revolution. This is not moderate improvement, moderate happiness. Analysts are pleasantly surprised. Eyebrows get raised. This is a completely different world. And by the way, again, I don't want to over-numerify this because, like, in a weird way, it's not just the numbers, but the importance of the numbers. It's not just 93. It's not just 115. It's not. We grew U.S. commercial at 149, almost 150%. 150%. Okay, but what's important about those numbers is you can see in the numbers, because of the charisma and truth of the sovereign AI riff and its importance that we helped launch together, that these things are going to go on for a long time. And why is this important?
Yeah.
We have people trying to.
That's an important point as well, as he said, these types of growth rates are going to go on for a while now. He even specifically said on the call, and we'll end up looking back on that, but that they're essentially looking to or guiding towards growing at the U.S. commercial rate this time and holding that growth for the next 18 months. Meaning for the next 6 quarters, we could see Palantir total revenue grow somewhere, as he said, he's guiding towards 149%. Not 93. 93, he's saying, is the low number.
Drug addict us to a future they believe they control. And I've spent a lot of time with Dario and the EA crew. They want to tell you we have to march into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, and where our adversaries win. And Palantir and our allies are guiding into a future where you have growth and jobs. The margins are a metaphor for everyone earns.
You've blamed the Frontier Labs of overcharging customers, right? The OpenAI has responded. They brought down their token cost in the latest model. But why are you deepening your threat against the big labs? In this investor letter, you say we have always declined and will continue to decline, entering into a parasitic relationship with our partners.
Okay, but you're taking two things. Charging for a price, which Palantir, we get paid a lot of money. Why do we get paid a lot of money? Because we create value for the customer first and value that they keep. So my central, obvious, it's not even an attack. All I did is put out facts. There's been no response to these facts. And primarily, I was talking about a philosophy that is downstream from the belief that because they will own the future, they can take your alpha and transfer it to them in the present. I actually truly believe if a lab or Palantir or an open weight model or people deploying an open model create $1 billion in value, they should make $300 million. That's a fair thing. It's not about what you charge.
Do you hear that? He's talking specifically, he gave you a percentage just there. He said if they can make you $1 billion, they should charge $300 million. 30% was his number, and he'll talk on this again. But this is going to be very important whenever we do our much longer Palantir review here in a moment, that the rates that their customers are talking about really point to the customers paying a certain level. He's talking about 30%.
Just what you charge for. Mm-hmm. If you're charging for something that creates very little value, and simultaneously, if I charged you $1 million for something and you're like, oh, what value am I getting? What if I charge you $1 million and you found out I migrated your whole bank account into my bank account at the same time?
And CEOs understand that. They acknowledge those comments you made today, 4 weeks ago when you came on CNBC. But what do you say to the small business that says, we don't have the budget to be able to have an open weight plus a closed source model. We got to just go with the Frontier Lab.
Well, I think actually what's going to happen more, I think actually that's the inverse. I think the smaller businesses are going to move to open weight models because they can't afford it. And also they are very worried about their IP. I think the reality of what's going to happen with our business partners, which are medium to large businesses whose fate most jobs in America upon which rest. So your economic future and our ability to defend ourselves rests on the back of our partners. And our partners are going to move for an application layer because open weight or closed weight, they're not putting those models on top of their enterprise. First of all, they don't create a lot of value. Second of all, the value they create gets migrated to someone else. And they're all running around saying no ontology, no love, which is like a saying from the 70s I had to look up. But it's like that's what they're saying. And they're going around saying, and by the way, we're educating people that aren't even our partners. Like, not everybody we educate is going to become our partner, but I'll tell you what, they're not going to fall for this trick if I give away the means of my production and pay for it. At least they should pay you. You know, it'd be a very different thing if they're like, hey, look, we'll pay. If I came to them like, look, I'll pay you $1 million. Yeah, your business is going to be worthless after I'm done, but at least I gave you some money.
What if you equity or something?
Yeah, or something. You know, so any case, but by the way, I've spent a lot of time with Dario. He's not the caricature people think. They have a philosophy. That philosophy is a very important philosophy, the determinative philosophy in the tech scene of the last couple of years. And that philosophy in its business practice basically says, in simple terms, I own the future, therefore you should migrate the value of your business to me and be happy with the derivative of that you sometimes get after a wealth tax.
It's a wild statement after saying I've met Dario multiple times, and the multiple things that he said, he's going, I'm not bashing Dario, and then says stuff like this. It's wild that Dario even continues to meet with him or something like this. But let's go through more of a broader Palantir review outside of what they just said, but that's going to be added context that we're going to need for a little bit of this review. But overall, Q2 was a smash. I'm not selling a single share. And in fact, I actually think that a lot of this 30% bump is absolutely justified. Not only because I thought that it was undervalued before this earnings call, but because it, went above and beyond my own expectations. So let's talk about why Palantir's earnings ended up crushing. First of all, like Alex Karp said in that video, they are really promoting this AI sovereignty. They're talking about how Palantir can insulate your business away from the Anthropics and OpenAIs, which do have amazing models, but at what price? At the price of you losing your data and how your business actually performs. So then OpenAI and Anthropic can train their models and then teach every single business how to do your business. How do you charge a premium on that? Palantir is saying, we can actually help save you from this and also help lower the cost of some of these tokens, but we're going to be the middleman and help be the orchestrator of a lot of that cost. But you can see from the revenue whether or not people believe them in the types of contracts that they're signing and how they're actually showing up in 93% revenue growth is the greatest sign that a company is seeing success in what they're selling. Okay. Then on that 30% comment that Alex Karp just talked about, this one I thought was amazing here. So this was Centrus Energy. They said, the nearly $300 million in savings that we have identified to date is only the beginning. $300 million is what you're saving. How much did you pay Palantir, So whenever they're going to build these types of contracts, do you think somewhere along the lines of $100 million might be a fair price to charge for a company that's saving $300 million? And that's $300 million in savings. That might even be net of their cost. So it might even be more. But that's the type of thing that Palantir can do for businesses and why they're happy to show up and pay for it. On top of that, we also saw the diversification of their revenue, both not just in commercial side, but also in government as well. Showing up on the government side was 79% growth rates year over year, continuously increasing faster than last quarter, but really showing up in commercial at 110% or 109.7%. This was on commercial in total, not US commercial, which actually was a little bit higher than this at 149%. But even here, Palantir said, Maven has also continued to win as a developer and builder platform for the joint force, with over 25,000 builders, uniformed service members, civilians, contractors, and companies are developing agents and applications in or on the platform at the speed of war. For all that growth, the Department of War is in the trailing 12-month revenue is spending less than 25 basis points on the Pentagon's budgets as going towards Maven. So whenever you're talking about total addressable market, are we even remotely there? This is one department for one contract spending a fraction of 1% of their budget with Palantir. Okay. And yet they're able to charge pretty high rates doing so. So gross margin ended up showing at a new company high, $1.6 billion. Gross margin showed up at roughly 84%. Really, really freaking high. And then on the operating expense side, we continued to see more of what we expected from last quarter. So don't look here in terms of the LTM that's not actually supposed to be there, but from this period, you can see the decreasing amount each and every quarter. And maybe I can even remake that later. But so sales and marketing ended up lowering to a new low of 17.5%. And then general and administrative and research and development also dropped to new lows, roughly about 10% on each of those categories, which if you just look a few years ago was roughly, 3 times higher, 2 times higher comparatively to past metrics. So they're getting more efficient. That efficiency shows up in operating profits, $912 million, 47% operating margin, new company high. And then net income actually came in higher than operating profit at $1.06 billion. You wonder how the heck did they even do that? 54% net income profit. And a lot of this actually had to do with SpaceX. So we found out that Palantir actually has shares of SpaceX. The IPO actually helped them bring in roughly a boosted EPS of 3 cents there, or $91 million. That's where you see that little differential between the taxes that they've paid and all of these things is non-operating income. But if you continue to flow down or go down the scale, you end up getting to free cash flow. Free cash flow, $1.2 billion, 62% margin on free cash flow. This is the cash generation machine. That brought up their cash pile another, roughly $1.4 billion, $9.4 billion with $0 in debt, a 56% increase year over year. 56% year over year on their cash position. None of this is going into buybacks just yet because they can't, but what's the flexibility of a company that has $9.4 billion in cash and net dollar retentions? Their customers coming back after 1 year to buy more and more of their products. This just continued to another new high. And if you look over the past 3 years, we've gone from 107%, which is very, very common in the software industry. And some would even say, that still is respectable, up to 111, 120. This starts to get exceptional, like very, very good. 139, this is starting to be like, some of the companies by far the best in the industry. 150 is unheard of. 157, we're starting to get comical. This is starting to get a little bit delusionally high in terms of both the margin and the growth rate. But this is why the stock is up 30% right now. Alex Karp also said, people always write about these things about customer adoption, and maybe, but the net dollar retention number is incredibly strong, and that they're also going to shift as hard as they can. There's also going to be a shift, and as hard as it is to believe, become even more positive because some of our older partners we haven't really interacted with are also showing up. So he's saying net dollar retention of 157, as hard as it is to believe, is not going to be the top. It gets better from here. That's pretty ridiculous. Billings ended up growing an additional 88% to over $2 billion. And RPO also, both on the short-term and long-term performance, ended up seeing roughly similar growth rates. They both kind of doubled year over year. So we went from 1 billion to 2 billion on the short term. And then in the long-term RPO, 1.4 to 2.8. They're almost identical, both doubling, roughly 100% growth rate there. So that looks amazing. Total customer count. This is the surprising part. Total customers actually did not grow as much as people would have thought. 42 new customers, but yet those 42 new customers are bringing in net dollar retentions of 157%, likely to go even higher, right? And you're seeing this massive amount of money that they're wanting to bring in off of such a low customer base, which really goes to show you that the total addressable market is so much larger than what they're even able to do, because they're not in the mass majority of the customers that they could be. What's the likelihood that they go from 1,000 to 2,000 or 2,000 to 4,000 different customers, starting to tackle smaller and smaller businesses, get more and more of their business? The TAM here is so unbelievably big whenever you consider the amount that they're charging just based off the customers that they already have. It's pretty wild. Then we got to talk about guidance, right? This one is really exciting. And I think why the company has popped up so much. Revenue surprised to the upside by roughly 6.8% again. EPS surprised by roughly 24%. So instead of the 33 cents that we were expecting, we got 41 cents. Okay. This has been a constant beats on revenue, constant beats on EPS. And this is why I think that the, guidance going forward, expecting 69% growth for next year or next quarter, and just continuing in that sort of phase of they believe that revenue is just going to drop off a cliff, opposite of what Alex Karp has said, is really what's going to bring the stock up much higher. Alex Karp said, I'm driving the business to grow at a rate equal or above to what we have in US commercial for the next 18 months. I'm driving the business to grow at the rate that US commercial, 149% year over year, for the next 18 months. That is unbelievable, guys. Wall Street does not have it pegged anywhere near this. So that's why, Wall Street is starting to come out and give higher and higher prices. But honestly, if they do deliver on that, 200 is going to seem like a joke. You're going to quickly see these prices get rised up probably another 50%, probably up towards of 300% if they do end up delivering at 150%, for the next 18 months. That is insanely high. What does the net dollar retention have to look like for that to happen? What does the rule of 40 look like whenever you're putting up margins of 60, 70% growing at 150%? Does Palantir actually get to a rule of 40 of roughly 200, like 220? Like, it doesn't even make sense, And yet whenever you look at valuation, this is where people say we're starting to get a little bit euphoric. We do have a price to earnings in the 120 ranges, and forward. And by the way, forward PE is off of what Wall Street is saying, which I think is criminally low right now, of roughly 85 times. Now, looking back to where we are, this is historically one of the cheapest prices that we've been able to get Palantir, but it still is high for the industry. But everything in Palantir is very high for the industry. So whenever you also go to look at free cash flow and you see that, forward free cash flow is at 68 times, I actually think that these are very, very reasonable prices to pay even after we're up 30%, because if we can end up hitting or achieving that 150+% growth, we don't need customer counts to explode to end up seeing the increased usage and these pushing the teams to want more and more and more, that they will end up achieving their goals of, hopefully bringing the stock price even higher than where we are today. That's how I'm seeing Palantir right now. Extremely happy. I think that it's very deserved that this stock ends up popping. But honestly, I wouldn't look too much at, does this earnings deserve this company to pop 30%? Rather, did this company ever deserve to be down in sort of the 122 range or, whatever it was whenever the earnings were actually going into this pop? That I actually think was undervalued. Now there's a percentage that gets us to fair value. And then obviously looking forward to where revisions are going to happen on, Palantir going forward. That's what I would really look forward to over the next, 3, 12, 18 months or so, is what happens to the revisions on Palantir's earnings. If every single quarter they beat and they raise up expectations, You know, you have to start looking at this company and say, okay, back in the day, we used to anticipate 2020 or 2030's earnings being $1.17, then $2.20, then $8.56, now $9.11. So if you can't get it right, you used to say $1.18, now you're saying $9.11. How much more is that going to continue? Like, how off are these numbers, and do we need to revise these even higher? That's, I think, the expectation going forward. You know, even just from yesterday, if we look to, 2026 or 2027, all the earnings revisions end up climbing up. But this has been a continuous trend for Palantir that we've just revised up and up and up and up, and the expectations for this company gets wider and wider. So very happy for Palantir. I'm a happy shareholder. I'll be continuing to hold, though, not looking to trim at all. Okay, we have a guest joining us in 15 minutes or so. One sec, I'm just sending Marsha a message. Okay. Earnings today is AMD, SpaceX. We've got a bunch of them. Let's take a look at the stock market. New all-time highs literally being hit as we speak. This is wild. I was on a little bit of a Palantir kick there, which is up 30%, 163.52, ladies and gentlemen. You got to enjoy these moments. There'll be days whenever Palantir is down. Today's not one of those days. This is what it takes to get a really, really big bump in a earnings report, though, is you need to have both the macro end up swinging and you to blow out earnings, and then you can end up seeing these numbers. And honestly, it can be pretty normalized. I feel bad for people that had covered calls out on this name. I think it would have been hard to have predicted that, you're not going to be safe going out to 165, for example, or 160 or 150s. But looks like we're getting there. Micron 900. Yeah. Oops, that's not the right Micron. There it is. Micron 900. It's funny how it swings. Like, everyone said that I was, delusional. like 5 days ago, everyone was like, you don't understand. I'm shorting semis. All those guys have crawled away and they won't comment now. But it felt like every single comment was negative a week ago, and now every single comment's happy and positive. Selling covered calls now. Honestly, I could probably look to doing that, or maybe I'll do it whenever I've got the guest on that way. Oh, well, that's kind of rude too. You know what? Selling Palantir covered calls, really short dated. I don't know. Like this company, we've seen it at 207. Like, if there's any company that is ready to rip, it's Palantir. But it definitely would be a good day to do it whenever they're up so much. And then the volatility, I'm sure the premiums are really high on this as well. S&P is up 2% on the day. Brand new high. Congratulations, everybody. Congratulations to the bulls, and we continue to head higher. Holy. Reddit's having an amazing move. Yeah, Reddit's doing well. The fact that company fell 22% on that earnings, I mean, like, the sellers of that stock really need to give their head a shake. What did you see? What did you see in the numbers? I want to know. Like, it looked amazing. That would be like if Palantir ended up falling, 5% on the earnings or something like this. And as crazy as it sounds to do that up 30%, I've definitely seen some quarters where it feels like that, where it falls. And I'm like, what are you guys talking? This was the greatest quarter of all time. But Palantir is not only going up on the news, it's actually getting the benefit of the doubt right now. Earnings did not beat by 30%, but yet the stock is getting 30%, which means they're getting execution credit. people believe more in what Alex Karp is going to say than they did the day before earnings. All right. Leopold was sacrificed for our good. You know, we appreciate the sacrifice. We really do. Ken Griffin's a happy camper with their $40 billion portfolio. 212 on NVIDIA. Leopold will be back 100% though. Like I don't doubt it. I think that directionally he's correct. I think that it's hard to time things. You know, it's very hard to put a ton of leverage on things, and so he can get burnt. But he's like what, 25 years old or something? Like he'll be back. He's like an actual genius. He's just got some investing. He's got he understands the technology. Now he's got to understand the investing part. Don't put someone else's eggs in your basket. That's the lesson that he just learned. Don't put 4x the eggs of someone else. All right. Let's see, Mag 7 here. NVIDIA, the most green name of the day for the Mag 7. I turned to look over at a company at 212 and we're seeing some red candles. It makes me sad. 211 though, still good. I will take it. Company back above $5.1 trillion in market cap. Looking quite good. We also see Apple up 2%. Very different than before we ended up seeing earnings. This company was roughly $344 a share. Now it's $309. Microsoft still continuing to have really green days, up 1.7%. We almost broke above 500. That's phenomenal. Google also doing well. Tesla up 1%. Meta 0.3%. Yeah. Looking good. Okay. Man, Marshall took the day off on Monday and I fell apart. Honestly, it's the weirdest thing about me hiring somebody is that you offload some of your work to him. And then whenever you have to do it again, I'm like, I don't even know, like, how do I even schedule a live stream? How do I even do these things anymore? It's been like 4 months and I just desperately need him. When did Marshall start getting time off? Honestly, Marshall started to unionize. I no longer have control of my own business. It's ridiculous. I want to do an earnings gamble today just for fun. Any tips? So I think that this can be something that can happen as well, is that people go, oh, you know, the markets are back. And they might be for now, you know. But like, I think people get in this hot hand fallacy constantly. And it's like, some of you guys have been around for years and still we get caught up in the momentum of things. And whenever things are very green, you have to be careful to realize that they won't be green forever. And that this is not just linearly, you know, oh, we're past those periods. Now it's just all hands on. Let's go bullish until we go straight to, you know, 8,500 or something. There'll be swings both ways. Companies can report less than desirable earnings. Not everything has to rip after earnings. I mean, it might today, but I would just be careful. I would be careful to start levering up just because we saw a great earnings report from yesterday for Palantir and Snapchat and stuff like this. Okay. Red Snow. That Thanks for all you do. Tonka T. Oh my God, don't call me that. Your analysis and slide decks are so high quality as always. Been loving the long streams. Appreciate it. Well, thank you for the nice words. Red Snow, you won something here. I remember this. You won a trivia game or something. Can you remind me? What did you win? I think I did a trivia question. I remember you. I just don't remember what it was. I think it was some... Yeah, Tonka T is ridiculous. I won Google AI Premium for 3 months. That's right. Sorry, it wasn't Google AI. It was Google AI Ultra, I think. It was like something like a $300 thing. That was awesome. Yeah, Google gave me that. It's fire. I've been using it a lot. Awesome, dude. That's freaking awesome. Okay. I've made back so much profits today. It's time for ribeye dinner tonight. Enjoy it, you know? I actually do agree. I do like to celebrate these days. You have to. Because then, whenever you can't celebrate and the markets are extremely red and it's like, all right, what are we doing this for? But, you know, you try to continue to build up these positions in companies that will be stronger for years and years and years and years. I don't necessarily subscribe with always taking profits on names like, you know, you look at these generational names like Microsoft or Google or Meta, or, you know, you can go all the way down to names like McDonald's. It's like, when was the right time to sell these companies? Like, they get into buybacks, they get into dividends. Being a long-term holder of companies, especially companies that I'm very happy to start in names. Like, I hope I'm a long-term investor of Palantir, the same way that I'll be a long-term investor of Google or Microsoft. That those, if you can hold them for years and years and years and years. I've been a shareholder of NVIDIA for, you know, was like 8+ years now. And I think a lot of people talk about holding on to companies for 10 years. They go, oh, you know, I'll hold on to it for 10 years. And then 6 months in, the stock sells off. And then you go, oh my gosh, I'm going to rotate out. And, you know, my whole thesis has changed. Like, yeah, okay. I do want to be a holder of companies for 10 years. Because I think that's really where real profits are made. And there can be periods longer than what you're willing to potentially deal with at the start of stagnation. But those stagnant periods pale in comparison to whenever a company is really appreciated for their growth that they've put up for years. And usually that's never linear, and that a lot of the premium is given at once. You know, and for the great companies like Palantir or Google would be a great example, that those periods of stagnation do happen, and then the pop happens, but it's not one pop. There are multiple that have happened over decades for Google that has led to the company that it's at today. Okay. Can SpaceX earnings have an impact on semis? Well, I do think that SpaceX can come out and say that they've been buying more semi stocks. They could also lower their CapEx and negatively affect companies like NVIDIA, for example, for which they've been a large purchaser of. So yeah, it could be an impact both ways. I'm really excited to see what the CapEx spend is going to be on SpaceX. CapEx, SpaceX. Guest is coming on. They're not in the background just yet, but it will be. I think. I mean, you guys all know them already. Like, it's not a new guest. They've been on the channel a bazillion times, but I do think it's our most popular guest that we've had since starting the new streams. But yeah. Did I see Elon's SpaceX tweet? No. What did he say? Unless it was the not generational buy comment, but I did see him say something about like he does believe that it's a great time to buy or something like this. I saw that one. He retweeted a comment about why SpaceX will be the first $10 trillion company. Do you guys think I do think there could definitely be a day where SpaceX is a $10 trillion company. If what they're guiding for actually does happen, orbital data centers and these sort of things, they could be a $10 trillion company. Just first to be a $10 trillion company, we'll end up seeing. Let me ask my guest here. Ladies and gentlemen, please welcome the great and powerful Amit Kukreja.
What's up, man? How are you?
Dude, I haven't had you on my channel in a long time.
Yeah, I feel like it's been like a year.
Yeah, it's been long. But
what's up? We got a lot to talk about.
Yeah. Do you think SpaceX earnings will be good today? Do you think they're going to be a $10 trillion company?
I think one day it's very possible. Street's expecting them to lose about 23 cents a share and do 6.82 billion in revenue. If they surprise and they like,
do you think that even matters?
Well, if they did a penny of profit, I mean, I feel like that would matter. But yeah, to your point, it probably doesn't. I was talking to someone today, and they were like, "Hopefully, Elon smokes a J before the call." And it was like mellowed out. I don't know, man. That one's weird to me. That one's like the can't touch bucket. There's so many opportunities out there with 7% of shares getting ready to unlock it. It's just scary because if it does pump, it's obviously liquidity for people to get out. And so I don't know. That's a scary one right now.
How does that unlock? Is that like the morning after?
August 7th. I actually know what time, but no, I think it's August 6th. Yeah, so it's in a couple days. Yeah, it might just be at 9:30. It literally might be at market open.
Yeah. Yeah, it'll be really interesting to see that. Yeah. You're the Palantir guy. You're the guy that got me involved. And actually, I think the first time that we met, back whenever I pitched you SoFi, I pitched you SoFi, you pitched me Palantir. One was great. The other one was opportunity cost. And actually, I think it was still like, 1/3 the cost, or, much lower than where we are today on SoFi anyway. So that one hasn't, I don't think that's cost you. But Palantir, this has been a long road for you. How are you sort of taking this all in? How are you, this company has changed your life. How does it make you feel that they are now delivering what might have been possibly the greatest software quarter of all time?
Yeah, it's kind of crazy, right? Because, I have a very special relationship with this company because I kind of bet my entire career on the company because it's the only company I talked about for basically 3 years before I branched out and started doing the market open and analyzing macro and stuff. So there was a deep level of like 3 years of just this company, just focusing on this. And I feel like it's a testament to quality over quantity sometimes. And, Palantir is known to have 20, 30% days. Like it happened all the time in 2024, 2025. So 2026 has been so much of the money flowing into the semiconductor names that to see a 30% day is crazy because it's been so long since we've had it. It's been about a year. But I mean, we've had these moments where it breaks through like 130, 140, or back when it was 60-50, it breaks through 60-50, and then it goes to 65 and then 68 and then comes down the next day, then breaks to 75 the next day. Like it has that level of momentum and excitement towards it. Obviously the multiple is a bit more aggressive now from then, but the growth is there. I think the street's recognizing that growth, and there's a lot to dive into for the quarter, but I'm just happy it's having this type of a day because it is one of those names in this market. If you're going to give all the premium to memory companies and to CPUs and all of this hardware that's being used to build the thing that needs to actually become operational on the planet so that we can actually have productivity and GDP growth, those numbers that you saw yesterday was the embodiment of that entire thesis. So I think it deserves to be up 30%, and hopefully it holds on to it, and hopefully we make a base around 140 to 160 and don't have to go back to the 120s.
You said the Wall Street analysts are starting to catch up to this, but I'm looking at some of their projections for revenue, and is this like not the opposite of what from what I understood from the call? Alex Karp said that he's going to be guiding towards turning the whole business, and maybe I can even find that quote. I think he said over the next 18 months. How does that like sort of line up with what Wall Street's saying? Like, why are they still so conservative here?
Well, because I think the number. Go ahead.
Sorry,
go ahead.
I'm just gonna read this real quick. I'm driving the business to grow at a rate equal to or above what we've done in U.S. commercial for the next 18 months. It's a very high goal, but that's like 149% growth rates, and that's not what Wall Street's seeing at all going forward.
Yeah, basically Karp's trying to do about 17 to 18 billion in top line in 27, and that would get closer to like 25 in 2028. The analysts have it at 40, 50%. I think there's two reasons. Number one, the analysts have always doubted Palantir's growth. It's part of the reason it's been so easy for Palantir to beat earnings is because the analysts, because of 22 and 23 and how bad the earnings were during that time, just felt this was a consulting company. They're not really into software. They don't know how to court customers. I mean, they had growth rates of like 11% in 22. They didn't have a sales force. So the expectations were always so diminished, which is why in 2024, even everyone on Palantir Weekly, we would not expect these massive growth rates because we were like, do we really think they can do it? And then they kept doing it and kept doing it and kept doing it. And now the cat's out of the bag. It's pretty obvious that it's not about the sales force. It's about the technology that's working in a meaningful way. The other reason I think they're discounting it is because it's just a big base. Like for them to do 8.5 billion this year and then have that go to 17 next year, it's hard to believe that, right? ServiceNow, Salesforce, none of these CrowdStrike, none of these companies are doing that. Yeah. So I think Karp's right. I do not think he would say that as explicitly as he said that yesterday, because 2 quarters ago he said it in a very nonchalant way. This time it was like, yes, this is what we're trying to do. I think they believe that. I think they have visibility towards that. And then the growth will probably start to taper off. But if that's the case, I mean, this stock has a date with 200 if they can actually get it to grow at that level.
I don't think people give enough appreciation to the visibility of their earnings, meaning they're not just going to work every day and seeing if they can bump out 1.5x what they did the year prior. It's like these customer contracts are saying they're going to increase their spend. Like they know that they'll be utilizing a lot more by 2027. So you said, did you say 17 billion by 2027?
Well, they're projecting like 8.2 for the end of this year. So they want to grow at 130% by 27.
Yeah, but like even that, like 8.2, they've Wall Street right now consensus is 7.7 billion.
Yeah, but is that a Fiscal AI thing that hasn't updated? Because they literally revised the guide last night. There's no way.
Yeah, this is based off these estimates right here, which is high end is almost 8.4 from 7.7. Oh, actually, no, you're right. This is a Fiscal AI thing. Now the consensus is 8 billion, 8.07.
Which is still a little lower than the high end of the range. So yeah, I mean, look, Wall Street's right to be a bit skeptical because these are big numbers, but that's the biggest benefit for shareholders because like expectations have to, reality has to beat expectations. And it's really easy to beat the expectations. If they say they're going to do this, Wall Street's like, no, you're not. And they say, okay. And then they do it. And Wall Street's like, oh, cool. We have to buy the stock,
Yeah. Even Seeking Alpha here has 2026, 8.15 billion. And then 11.88 billion for 2027.
Yeah, if that 11.8 is 16, 17, it's over. Like if they can do,
they're a year ahead.
They're a year ahead. I mean, that would be half of ServiceNow's revenue. That'd be crazy.
And then even then, the forward price to sales or whatever the EPS is going to be on that. I don't know what did they say an EPS target? I think they just said like they want to be GAAP net income positive or something.
Yeah, they've usually never given EPS targets. It's usually just revenue is the main thing.
Did you know that they had a stake in SpaceX before this quarter?
I know. When Amir said that on the stream yesterday, I was like, what? Do you have the price we got it at or cost basis?
No, but I saw that you guys got a 3-cent EPS boost.
It was 72 million, but I wonder how much we paid for it.
Yeah.
So that was surprising, but not bad.
Yeah, they might have had it for a while. But hey, I'll take it. And some people make it out to be like those boosts are like not real. Like, oh, you need to, and obviously you do need to look at the operating profit separately. But did Google make $100 billion on SpaceX? It's like, if they did want to sell those positions to then put more into Google Cloud, that money is available to them because of Google Ventures years and years ago. Like, you have to give it some sort of valuation. You can't put it to zero.
Yeah, and it's 3 pennies. They would have beat without those 3 pennies. So like if it was like 50% of their EPS, that's a different question. But I mean, these are strategic things that companies should do. They have $9.5 billion in cash. So I would imagine they're probably going to keep allocating more investments. How do you feel? Because you just got in at, I think, 120-ish, maybe a little bit below that.
Yeah.
What is your experience like? This is your first actual earnings owning Palantir.
You know what? I wish I've said this before. Every big mistake, like people can look and they can point out BM&R and all of these things and say like, hey, you know what? You've made a bad decision here. The real bad decisions is in selling early on companies that I should have held. You know, that's the real mistakes that I've made. Like selling Palantir early and not riding it from, 20 to where we are today, like 160. That's where all the money has been lost. But it's not a red negative number in your portfolio. It's just a lack of a number, Yeah. Now that I'm in, there's zero stress. Like I was not worried about earnings at all. It's just one of those hard things where you have to pay a premium for companies that are exceptional. And that's not always great. It's much easier to buy a company that has a 10 PE than it is to buy a company with 100 PE. But at the end of the day, if they continue to beat my own expectations, then I'm going to be an extremely happy camper. I would have been fine if this company was up 10% off this earnings, but the fact that it's up 30, I'll take it. But I'm in no rush to see the outcome of where Palantir is going. I'm holding this for multiple years, like you are. I'm just very late.
I think something that today has taught me once again is like owning more of the companies you understand better than most people, meaning you've just done more research on them, is really the goal, right? Like you knew NVIDIA more than most people back in 2018, which is why you have such a large position. And it's obviously worked out. It's had a crappy year, not done much, but like you've owned it from a lot lower than 150, 160. So it's like for you don't really care. Just like for Palantir, it's been an annoying year, especially with all these random stocks running and the one that's creating all the alpha is not. But like a lot of people know what they own when it comes to Palantir because it's, they've just been so hardened to believe in what's happening. And then you see the execution match that reality. So I think when it comes to bad calls, which we're all going to have, like that is inevitable. I wish we would normalize more like Buffett gets it wrong, Ackman gets it wrong. It is really hard to pick stocks. There's a reason why there's all this research and community that we're building. It's like, it's tough. But the names that you do understand the most, letting that thesis play out, as annoying as it might be for it to take time, which again, Palantir took almost 3 years before it really played out. Like it's the most rewarding thing in the world. And just being able to own high quality, like your Shopify thesis. I recently started buying Shopify. That's an expensive stock.
Yep. On
some metrics, it's more expensive than Palantir. But I just believe so much in Toby. I understand Shopify will be around for a very long time. Agentic commerce is a massive tailwind. And it's like, I could wake up in 10 years and be like, Shopify is going to be around.
Yeah.
And so I think that's the name of the game. Just trying to get more of the companies you understand the best.
Yeah. It's the beautiful thing, right? And I was just talking about this earlier, but like, you just get to slowly compound in your ownership of these companies. Me and you were like the exact same age. So we have a time horizon advantage. Like we started really young. And so if these companies are buying back their stock, I continue to buy into them. I can get into these positions. And, people make it out to be like this up and down sort of game where you try to buy low and then sell high and then buy low again and sell high. But the truth is like Shopify's making more money than they ever have in their entire existence. And like, it's just been straight up. And then they're using those profits to buy back shares. And, same thing with NVIDIA or Palantir or any of these businesses, even SoFi, that company's been very stagnant for a long time, but it is at the strongest position it's ever been. So there can be times where companies can be undervalued and there can be times that they're overvalued, but hopefully that middle point of fair value has continued to climb in the right direction. And during those moments, I'm not really trading those. And some people can make a lot more money than me, but I'm not worried about what other people are making. I'm just worried about, having a great portfolio that's going to last, hopefully, my life. And I don't have to, play prediction markets or, things with expiry.
Yeah, it's one of those things I've been like, 30 years from now, do I want to have more Palantir and Hood or do I want to have less? And do I believe in those names for the next few decades? And it's like, I think everyone sometimes tries to find the hot new name. That's another thing this year has taught me. It's like trying to find the hot new name in a raging bull market is a valuable skill, and it is important to be able to diversify your research and all that type of stuff. But man, actually investing in it, like not trading it, but legitimately believing, okay, this thing that I just found because I saw a bunch of tweets about it and I've dug in and done my research and it's going to be something that I deeply care about. It's just not my style. I feel like it's not a lot of people's style. Like part of the reason we get so attached to individual names, not even emotionally, but just like from the research process, because we built a position, we believe in it. If something breaks the thesis, it breaks the thesis. But like you kind of hold on for the ride and you trust your due diligence in getting into that ride in the first place, and you have to deal with the bumps along the ride. But these like Penguin Solutions, I mean, that stock exploded. It's at $58. And I think it went from like 40 to 90. Now it's back to 58.
Yeah.
There's no way anyone's really buying that for like some long, it's just like, no, you see it as a memory play. It's, Rosenblatt put a good target on it. And so you buy it. But again, that's trading. That's not like, and that's fine. It's just not one of those things where you can actually live with yourself every night knowing I have this penguin thing in my portfolio that I'm happy to hold if it goes down 50%, which it did go down 50% in like 2 weeks. So I think the name of the game is buying more of what you own. And I keep telling myself Palantir is the name that I know the most. And if they keep executing, then this is just the name that I want to own for a very long time.
So aside from just the long-term names, I mean, you do play some shorter position names as well, or do enter hot names just like me. So I would look to names like Nebius or CoreWeave that a couple of years ago I didn't even know existed.
Yeah.
How are you looking at those right now? We've both had, spoken with Chris Patel or followed Michael Burry or some of these things. And I watched so many interviews with you and Chris, and I don't find you're very combative. You're definitely a super active listener, but then your actual decisions, what you make with your own money, like continuing to buy the dip on Nebius and these sort of things, says opposite to the way that you maybe agree with Chris on certain things. So where do you sit?
Chris is on the stream to give the bear case, and I listen intently. But dude, he called me a couple hours ago. He's like, "So did you see any red flags in Palantir?" I was like, "No, Chris." He's like, "Not even." I was like, "No, they're fine." He's like, "What about customer count?" I was like, "Who the fuck cares about customer count? They're gonna be fine. Like, they're growing the top line revenue by 93%." But yeah, I like his perspective. I like a skeptical point of view. I think you have to have that inside of your circle of investors. I think on the Neoclouds, his thesis is just they are fancy REITs and they're like building the bare metals of what ends up being licensed. And I think to an extent that thesis can be proven to be correct for certain Neoclouds. But I mean, when you look at Nebius, and you've been right about this for the past year and a half now, like it's a full stack solution. Mm-hmm. It is not just like renting out the GPUs. There is significantly more layers to it, in their equity stakes that they have, and also in the software component about actually building out the infrastructure to get not only compute distributed, but to make tokens meaningful for a company, which is what you would expect out of an AWS, GCP, Azure, et cetera. So to me, it's much more resemblant of that. CoreWeave is just, I think you and Steve have been spot on this idea that if Nebius, when it was trading at like 280, you guys looked at CoreWeave at 100, like this doesn't make any sense given the backlog. And then CoreWeave fell to 50, obviously, or 58, obviously a really good dip buy for people.
I love Steve. Don't put me with Steve on this one. I'll sit with Roy. Chris, I tried to talk Steve into buying it. He was super anti me, so he's late.
No, but he started buying it like crazy over the past couple of weeks.
Yeah, I know. He's late.
Wow. I mean, getting it at 70, 80. I guess he was late on the thesis, but the Leopold situation gave everyone who was late on anything in semis and tech an opportunity, to be honest. Being
late made him have a better average price than me, but he's still late.
Exactly.
But it is an interesting name. Not only do you have to believe in the AI thesis and the continued build out and all of this stuff, but then on the other end, you have to believe that they can afford to continue to do this versus just the hyperscalers that have other businesses that can afford this build out. Like at the end of the day, does Nebius and CoreWeave survive, or does Google, Amazon, and Microsoft Azure just take up all of the possible demand? They're the only ones that can continue to actually afford this build out.
I think that, Jim Chanos, I think this is his big point as well, which is that the big guys are just going to eat up these little Neoclouds. And to be honest, there are some of these Neoclouds where it's like, what are we even doing here? Like, what's happening? Yeah. But with Nebius in particular, especially given how founder run it is, there's something deeper. And I would say the same for CoreWeave. But then, you know, to push back against my own statement, Anthropic signed a $10 billion deal today with some
Volta.
bit deer. It's like these are not the sexy names you see in the Neocloud space, and they're getting $10 billion comp. So if the demand for compute truly is as insatiable as it is, and those constraints continue to last, then I think that in and of itself is a thesis for the Neoclouds, but not every one of them. The best ones, I think, actually have the trajectory to go on for the next 5 to 10 years.
It's so funny. Every single one of these names, going to Chris's point, though, to be honest, Volta, all of these bit deers, all of these, no one knows these names, so they always say Volta, backed by NVIDIA. It's like you have to put that stamp. It's almost like a verified purchaser type stamp, across the Sharon AIs and all of these. But it also goes to, I was just going to say, it kind of takes away from the moat as well. If anyone can do this at Anthropic level,
takes away from the moat from the Neoclouds.
Yeah, like if a shoe company can go in and sell their existing business and go find customers, just buying GPUs, how much premium can you charge? Like, will there be a real differentiator, or is it just about how much capital that you can find?
Yeah, I think that's fair, and I think that was kind of what I struggled with the Neoclouds for a while. But I think the most high quality ones, like Nebius and CoreWeave, probably have the differentiating variables, and the deal flow CoreWeave, Meta, OpenAI, like Meta, they did like a $30 billion deal within 6 months of each other. It's one of those things where they are the they are the first resort you go to, and then NVIDIA is the last resort because they backstop them as productively as they do. Now, and from NVIDIA's perspective, I think they want 1 billion Neoclouds, because that obviously means a lot more GPUs get sold and you just spread more compute. But the cream of the crop will rise, and I think the market's already giving the premium to the 2 or 3 names that actually matter in the Neocloud space.
Yeah. We got Zeta earnings tonight. Are you still in this one?
Bought more today, 23.70.
Okay.
Bought some more.
All right.
Obviously I think it's undervalued. 50% growth at $4 billion market cap. I think there's a moat with first party proprietary data. I just don't know if the street is going to be impressed. I mean, they're not going to have Palantir type of numbers to impress the street, but they are going to have top line growth. Oh, wow, it's 24. Okay. So far, buying into strength is working so far. But today's a really good day too. Like, I think everyone should be looking at a lot of these price actions and be like, okay, this is just like SpaceX up 8% to me is like, who the hell's buying it right before there's about to be a couple $100 billion of shares to be unlocked?
Yeah.
Like, if the S&P wasn't up 2%, SpaceX, Zeta, these companies wouldn't be up them. I mean, maybe Palantir but Palantir is going even further now because you've got so much liquidity flowing in from the bull market. So I think if they just have a good quarter and the macro stays okay, I think Zeta should be fine. I do not think this thing should be worth less than 10 billion, but we're gonna have to see. We're gonna have to put up big boy numbers to get the results.
Do you think that there's a possibility? I don't know Zeta very well. I think they put up like almost 50% growth rates, but it was kind of like on a bad comp that they put up that 50%. Are they putting up similar numbers to what we saw last quarter?
So in 2025, they did 308 million. The analysts, which is 25% growth at the time, the analysts today are expecting 420. So it will definitely not be 50%, as you said. It's going to be more like 27. So I would expect them to come in at around that 30.
Yeah, okay.
Range. The analysts are also expecting them to lose money. Yes, expecting them to lose about 3 cents.
That's not going to happen, right? I thought they said that they were going to stay perpetually profitable or something.
I agree. I don't think that should happen. So, I mean, you get a 35% revenue beat. I mean, they've beat and raised for 19 quarters. I'm sure this will be the 20th one. But I think for Zeta, first of all, I think they should do a video call. I think a video call for a company, like when you're that close to retail and Zeta's really been developed, like this is when you lean in and you really say like, hey, this is time for, because the last call I listened to, it was horrible, dude. It was like a Zoom, it was like really bad. And so I think they need to change the call. Number two is they need to announce either an acquisition like they did with Marigold, or, and they just raised, $1 billion in credit to be able to do that, or they need to talk about the runway they have of clientele and what that means for net dollar retention. because they're already giving these clients a massive ROI. If they can mix that with net dollar retention and show that trajectory on the raise, I think they're guiding for like 1.8 billion. That goes to like 1.85. But like if they just raise every metric they need to with an emphasis that net dollar retention, the money that's coming in is coming in even more aggressively. Meta did great on ads. Google did great on ads. Reddit had a great quarter. Like you would imagine that tailwind should help Zeta. And then the valuation is like 3 times sales. So I think a re-rating to 30, every price target on the street is around 30 to 40 bucks. I just don't think it's out of the question here. But if it goes back to 20, I still think it's a great buy in that 18 to 22 range.
Yeah. I haven't gotten involved yet, but I am following it closer. I think we're doing earnings together. Are we doing earnings together?
Yeah, we have you, me, Neil, Jose. It's AMD.
Yeah,
SpaceX. We'll listen to AMD, but AMD, SpaceX, they were the big ones. Yeah,
and then Zeta. Upstart. Yeah, there's going to be a couple. It'll be a really fun day. Aside from that, I wanted to ask you just generally about the Mag 7 names. So are you looking to buy into any of these names, or as we've sort of gotten into this sell-off, are you buying like higher beta, sort of getting in more risky names? I see like people like Roy doing that a lot, where as we sort of had this sell-off, he's like trimming NVIDIA and buying more CoreWeave and kind of increasing his risk.
You would think Roy, from his appearance and the way he talks, is like a concern. These guys are degen. Like he loves AEHR. Like he loves high beta. I mean, that's part of the reason he got into Palantir and Hood. So like he loves that shit. So
yeah,
his portfolio was up like 20% over the past 2 days, but it's only up 1% for the past month. That's how ugly like the July has been. But it's good. People are.
Wait, real quick. How pissed are you that I have Palantir in the stock draft right now?
Yeah, it's annoying because it's like that was going to be my second pick, and I don't understand. And this Steve's stupid format.
It's terrible.
Dude, like that format. Anyway.
Well, to be fair, either way that we would have done, either the format that he did or the snake draft, you would not have gotten the second pick.
I didn't expect you to take it second. Steve wasn't taking it second. Matt wasn't taking it second. Chris definitely wasn't taking it. Jason wasn't taking it. So you swooped in and took it. The problem was, again, NVIDIA is the first pick, logically makes sense. But once again, the problem with NVIDIA, and by the way, you picked it and then it went down to 107. So it was like, it's like a nasty drawdown before it came right back. NVIDIA, it took a little bit of a drawdown, but NVIDIA just, I think I picked it at 208 and it went to 190 and now it's back to 212. Like, this has been the problem with this stock all year. This is the debate you and I had in January at GTC. You were like, it's going to 250. I was like, I can't see it going to 250. I still think you believe it can go to 250. I still don't believe it hits 250 this year, dude.
It's going to 250.
It will, but this year?
I see it in the stars. It's happening.
This year, by end of the year, it's going to be 250.
Yes. Yeah. We are about to grow by 100%. You know the comment that you said this morning? You said, or that Alex Karp said this morning, is he said no other company is growing at our level at this scale. And then also you brought up that they are beating NVIDIA at rule of 40. They're beating NVIDIA as rule of 40 a quarter ahead. They're not going to be beating rule of 40 for NVIDIA. NVIDIA's rule of 40 next quarter is going to be like 165% or something.
Okay, what if Palantir's 167?
No. We're talking Q2 to Q2.
Well, for now, they're technically beating them.
Yeah, from last quarter, they're comparing them to Q1.
Well, because NVIDIA didn't report Q2, so
I know. Lying. So let's wait, and they're going to be beating them once again. And that's this is a $5 trillion company putting up these types of numbers.
Well, that's the thing. When I picked NVIDIA, it was just like, it's to your point. It's like, it's cheap. It should run. Dude, we've had a massive bull run over the past 2 days. Every Mag 7 outside of Meta has broken out. Tesla is a different story. Apple did break out, then it came back down. And still, this thing is flat. I mean, basically from a month ago when I picked it, it's flat. And so the problem with this name, once again, is like, it doesn't matter how cheap it is until it has that run, which I still am skeptical by this year, dude. I think 230, optimistically, 250 to me is just so aggressive. That would be basically 6 trillion, right? Roundabout.
Yeah.
Or 5, but like I just don't. I think it's too big for it to move. But if it does, I'll be happy. I don't know if it actually gets there, and it'll help my stock draft. But I don't know.
Yeah, we'll see what happens with the stock draft. My first pick was Microsoft, so I've had a really good, last week. Microsoft, Palantir. I picked QXO just to piss off Steve, but I don't even want it anymore. I shouldn't have picked it.
Dude, me stealing a Rocket Lab from Matt just led me to a 30% drawdown, and then you picking QXO, same thing.
Yeah, and Steve picked CoreWeave from me, and he's down like 30%. So anyone who stole for the most part has lost.
Wait, what is Matt up on SoFi? Because he stole that from you, right? SoFi is...
Some of the steals have worked. Palantir
but he's up 3%. It's not like he got a great deal there, you know?
Yeah.
Yeah, the problem is the timing of the draft. Too. Next time we need to do this in January, because June is a weird... Like, it should be... You know, you're judged in your performance to the S&P as a fund manager, and that starts January 1st. Like, I really think we should start it next year, you know, the day it should start.
On the year that I'm doing well, you want to call it early?
No, we can still keep this one, but like we should start another one. That's
Yeah.
And like, I mean, the SpaceX short from Matt, I think either today blows that up or he goes up like 50% on it. Right now he's up 30%. I mean, SpaceX, it gaps up 10% tonight.
When is the rebalance? Because I got to make sure that I'm available. It's not this next weekend, is it?
No, it's like in September. I don't know what time.
No, I think it's August.
Well, Steve hasn't texted us for when.
Okay. But I'm pretty sure it's June and then August. That would make sense. No?
I think you're right. I mean,
no, September.
That's what I was he said September originally, right?
Okay, yeah. Sorry, I thought he put in the group chat. He was telling like Jason or something because someone was, or maybe it was Chris. Chris was freaking out about rebalancing because he went in the infrastructure names. Now he hates it.
Chris is so bearish infrastructure, but his whole portfolio, he should have just picked software because he actually likes software.
My dad just texted me. Can I read this out loud? Just sold Palantir. Held it for 36 days. Made 12K US. If you have any more stock suggestions, please keep them coming. Love you, Dad.
12 G's? Not bad.
Made 12 G's in 36 days. As a retired man, that's a good day.
I was seriously thinking of buying the 140 calls expiring this. Like when I mean seriously, I was just like legitimately thinking of buying a sizable amount of the 140 calls. And I chickened out because I was like, what if they have a great quarter and it tanks again? But
yeah, because like a great quarter last time didn't do anything.
The last two times, and the last quarter, one could argue was the greatest quarter in software history. I mean, this one was the next one, but it's like, but man, it would have worked today.
Yeah, it's like the those people where the only person that can beat their world record is themselves. That's what Palantir is doing right now.
Exactly. Yeah.
Yeah.
Do you think SpaceX pumps today?
You know what's funny is I had that call with that person I was telling you that I was talking to you about the other day. It was about SpaceX.
What?
Yeah, they're on retail sentiment and
okay.
All that sort of stuff. But for SpaceX, I don't know what's going to happen. It's first call, so I don't really know what to expect. I think I want to make sure that they're not pushing back timelines. V3 satellite coming second half of 2026, like all those types of things that we're hoping will be very successful launches continues to happen. But what really started the sell off on SpaceX was they canceled the Starship thing. If you remember that fell like 5% on the day because they, last second didn't launch. If it was in private markets, the stock, well, obviously wouldn't have moved, but they probably could have raised at an even higher valuation. But in public markets, anything momentum-wise can bring the stock up or down. So I'm super excited for SpaceX. I'm so happy they're public. I'm not necessarily looking to buy. What I said today is if it was SpaceX or cash, I would buy SpaceX. But if it's SpaceX versus other great businesses, the Palantirs, the CoreWeaves, all of these things, there's other great opportunities.
I think if it was SpaceX or cash, I'd stay in cash, dude. Like, I can't trust that thing, but 96% of shares will hit the market over the next year, including Google shares that they still can't sell, which is not up 100 billion anymore. Like,
what is the value? Like, I'm betting on Neoclouds right now. I'm loving CoreWeave. I'm loving Nebius. And there is an argument to be made that the greatest hyperscaler is SpaceX. They set up data centers faster than anyone at cheaper costs. What is the value of that?
Whatever it is, the multiple is too high. Like, and the multiple is too high because it's like ARM with SoftBank. When 4% of your shares are available to trade and people that have been holding them for 20 years are finally ready to get liquid, I don't care how many orbital data centers you have, those people will be selling. And so it's a game of cat and mouse. You need to really convince everybody that's what I'm saying. I feel like Elon needs to announce like there's a data center on the moon right now or something. It's something, because why else would you be buying? I don't get it. And if it goes to 200, it's one of those things where I look back and be like, okay, let people buy. This is not something that I have the stomach for.
I mean, it's definitely going to have a premium versus other stocks. It's an Elon company.
It already has a premium versus other. It's not like it doesn't,
I don't think that if you're looking at this company traditionally that you're going to say, hey, I need to wait for it to get down to $35 before it looks reasonable to other tech companies. That's not going to happen.
No, but dude, it's worth 1.6 trillion. What is your alpha? If you're buying a growth stock, you have to be going for at least a double. Have to. If you can't justify 3 trillion, which I can't, then what's the alpha there? I mean, I could justify Meta 80% from here, doubling from here. I could justify Amazon even doubling from here. I don't know if I could justify SpaceX doubling from here because SpaceX doesn't have the growth. Now, if they change the growth rates, things change. But
but dude, they went from, you had, what was it, $18 billion in revenue, and then they flicked a switch and turned on $28 billion in annualized revenue through their cloud business.
Yeah, but how much of that is actually profitable?
How could it not be profitable?
Well, what are the margins on it?
Well, they're charging 3x the market rate of what other companies are charging, and there's been a lot of comments saying that Jensen sold Elon chips at great rates because he wanted Elon to have the chips. How could it not be
that's fair. Well, then why is the street expecting they're going to lose? I mean, does that mean Starlink is losing?
Yeah,
money?
But they're losing money on everything. They're
if you're growing. Then why am I? If they're losing money on everything, and this one Anthropic Google deal is keeping them in the black, what am I paying a multiple for? Yeah, but that Palantir has not always been profitable. That a lot of these businesses, this is like looking at SoFi's business back in the day, and people are like, oh, it's not profitable. I'm like, this is so short term. Of course they will be profitable. Now, SpaceX could legitimately be not profitable for the next 10 years. I'm not this is not going to be the fast turnaround, but they are not going to sell satellite services direct to sell or something like this. This is the crazy thing. They already have a lot of the infrastructure. They're creating this infrastructure, which a lot of Elon's businesses, that they can sort of flip a switch and have this major amount of revenue come online. Similar with Tesla, The difference is when Palantir and Hood were unprofitable, you could take a bet on them and they could go up 20x, which is what they did. SpaceX being unprofitable, I totally agree with you. You don't have to buy profitable tech, but it's not going up 20x anytime soon. There's so many better opportunities. I have zero FOMO or desire to be I need to be in SpaceX. Zero.
So what are some of the names? I'm sure you're going to say Zeta. I could see Zeta 20xing if they get it right. Small company, big.
But it's not even about finding a smaller name that can 20. Palantir and I didn't expect to 20x. They happened to do that because they were such small market caps with such a long trajectory of growth. SpaceX is almost at 2 trillion.
Yeah.
At the end of the day, has NVIDIA not taught us anything? Being at 5 trillion makes it really hard to get to 6 trillion.
Yeah. Yeah.
So I'm not excited for SpaceX at all. I think Meta is a cheaper valuation. Now, SpaceX is a lot more exciting, a lot of different stuff going on, but I feel like Meta is a better bet here. I feel like Amazon, even at these levels, is a better bet. Now, it could pump for whatever reason, but again, all of that momentum will have hundreds of millions of shares that are getting ready to get sold into. So it's just can it compound with that much selling pressure for the next year? I don't see it happening. But if it does, then
yeah. Like I said, I'm not an investor in SpaceX or anything like this. And as we were going up to 3 trillion, and there were a bunch of comments saying that it's 5 trillion, I think the biggest bubble that people, or one of the greatest signs of a bubble, is whenever people push out their timelines into infinity. People don't talk about this enough. As people look to companies like SpaceX and Tesla and they say, yeah, but look at it 20 years down the line. Look at it's one of the greatest signs of ignore the price today, worry about a lifetime later. It's okay, there's your bubble right there. And then on the other side, you have the bear markets that get created whenever people are going, yeah, SoFi is not profitable for the next 3 months. I'm not worried about where they'll be a year from now. They're not profitable in the next 3 months. Like, okay, that's when the stock was $4. I think, you know, a healthy place to be for markets is whenever you're looking at a company sort of 3 to 5 years out.
Yeah, I agree. I also think, you know, the Tesla bulls have been saying, just look out to the future. And I think people have realized there's a lot of fighting internally in the Tesla community, because there's a lot of people pushing back and be like, dude, I'm tired of looking to the future. Like, it's been 5 years and we got nothing, you know?
Yeah.
And so you can keep saying, look into the future, which in many moments you need to. But when you, as you said, when you go 10, 20 years out, at that point, you don't even care about the day-to-day. At that point, you're just buying it, and it might as well be something you never look at. Most people actually care about it, you know, somewhat beating the S&P 500, somewhat having performance, and you need to have real earnings for that to happen.
Yeah, yeah. There's a lot of execution credit on Elon, and that's the thing that people also forget, though, because he hasn't, like, at least in public markets, Tesla and SpaceX have not really delivered a lot of gains right now to retail investors in the last little bit. But he has achieved the impossible, like, multiple times. You know, you're still betting on the guy that's catching rockets and creating a new class of vehicle that didn't even exist before him. You know, like, you're betting on him to do something that you haven't even thought of just yet, that he's going to worry about. You know, there's a lot of Tesla investors are holding on to this shares that didn't think about Optimus, didn't think about Cybercab. That wasn't even part of it. It was just an electric vehicle company.
I'm a fan of Elon, dude. I've been a fan of Elon for a long time. I think I've been the most objective of trying to, like, be like, hey, this is, like, some people think I'm an Elon fanboy. Some people think I hate Elon. It's like, no, this is the companies. This is how we analyze the companies. This is the person. And for whatever flaws the person may have from a political perspective or anything like that, like, no one's perfect. And I don't agree with him on everything, but he's the greatest entrepreneur ever. Like, he's legitimately changed the world. And
I think talking about the political view is worse than the potential political view. Like you're just going to alienate people. Like, why? It's bad for business. But
well, I think so many people hate Elon also because they hate his political views. And so he knows that they're going to hate Tesla because of it. Mm-hmm. But he also doesn't care. But that means if, you know, people in the media talk about Elon, it's immediately gets associated with, if you like him, you're a Republican. If you hate him, you know, it's like, I don't know. It's one of those things where I respect him so much. I just, valuation wise, it's really tough. I mean, Tesla's performance this year is kind of proving to you that valuation, again, does matter. You cannot and Tesla still trades at a ridiculous premium compared to everything else, but you cannot have years of no earnings growth hoping that there's some massive robotaxi build out. Where is it? Where's the robotaxi build out? Where is it? It's not, yeah. I don't see it. It's not happening. FSD is not really growing at the level that it should. And then Optimus, Elon just puts the timelines out again. Now, he will, once again, change the world. Tesla will be a very valuable and important company. But in the meantime, you know, there's just other things that are out there to be more excited about. And Palantir is one of those companies because they're actually growing earnings.
Now, let me ask you a question on the memory trade. I think this is maybe one of the most contentious areas, at least in the AI trade, or the areas that I follow. What is your opinion on companies like Micron? Extremely cyclical, low valuations. How do you look at that?
I just don't feel I can meaningfully hold on to these types of names because I don't think I have a full grasp on exactly what's going to happen with memory. I think there's two things to care about. Number one, when do memory prices peak for NAND, DRAM, HBM, et cetera? And then two, when does supply start coming online? Every memory bull will tell you the prices aren't peaking for the next 4 years, and that supply is not coming online basically for the next decade. And I just think there's a lot of counter research and that goes against that claim. And not only is there counter research, there are companies in the private sector that are innovating when it comes to memory and memory optimization. Number two is there's a lot of research that's out there. Morgan Stanley had a bunch of research in Asia that came out over the past week that even if it's wrong, the sentiment of it makes people think it's a house of cards and they want to get the hell out, which is why I think Micron hasn't gone back up to 1,200. You look at the forward P multiple, like it obviously should be 1,500, which if it gets there, I wouldn't disagree with it. I wouldn't be like it's a bubble or anything, but it's one of those things where it's a little scary to take the bet at this level. I think you did a great job buying it at 400. You bought the dip at 350. So the alpha's there. You don't even have to worry about your cost base. It's not going down 50%, but the risk to reward, I mean, Micron from here to 1,200 is like 30%. Palantir just at 30% a day. I bought 100 shares of Palantir yesterday at 126. Like, you know, like that company I understand and I know is going to be around for a long time. Why am I going crazy to buy Micron where I don't even know how to understand the volatility? So from everyone I talked to, memory is going to be super, super important. I think there's any innovation in the bottleneck of all these trades, they don't become long-term holds. And most people I've talked to are not ready to hold Micron for 5 years. Not even close. Maybe 5 months.
Well, then where are the areas that you are focused on that you do think there might be some undervaluation to the potential pop that we might see in supply or in demand?
Well, in the semi space?
I mean, not necessarily, but obviously there is a lot of focus on the AI trade, and I know you're focused there too. But if it's outside of the AI trade, then yeah.
I don't think anything's massively undervalued anymore. I mean, we're in a bull market. S&P's at all-time highs. Now, don't get me wrong, some stocks got really hit over in the month of July. And the Neoclouds I've been buying because I feel like I've come around to the fact that they're the most sustainable in this broader AI trade. And so like it makes sense to be a bit more excited about them. Reddit is one of the names I've been looking at. Obviously, you've done a good job analyzing that. That one got kind of stupid at 135. I think Shopify continues to be undervalued. Microsoft at 385 was a great deal. The hyperscalers, it's kind of easy to be like the hyperscalers have been good bets all year. And in the past week, it kind of proves to you how much the hyperscalers were good bets, with all of them up almost 20% each. Meta's been my second largest Max 7 allocation behind NVIDIA. And that one has not performed all year. And we can talk about that, but I think eventually it will perform. But in terms of like the smaller bottleneck companies where there's a supply-demand imbalance, whether it's photonics or memory or hybrid bonding and stuff, like again, every time I go deeper into these companies, I really ask, am I actually going to hold this or am I going to trade it? And like as a trade, I think as a trade, Micron's undervalued. Micron back to 1,000 seems like a given. A, because the option flow is super bullish. But B, it's like at 1,000, it would be cheap. And we know the next earnings are going to be amazing. So I think DRAM here, Micron here, SK, these all make sense. It's just, I don't think people are buying them as trades. People are buying them to like diamond hand them. And the diamond handing part is hard to estimate given what we saw in July. And now that sentiment is somewhat back, if it doesn't fully come back with the leverage that was needed to get these stocks to all-time highs, what's going to get them there? I think that's the broader question.
Are we in a complete echo chamber, by the way? Like every name that you said, our Palantirs have just been blending recently. Like you're buying Reddit and Shopify, and I'm buying Palantir and, you know, all of these different businesses, and our portfolios are just seeming like they're like sort of overlapping. Obviously very different weightings, but are you ever worried that we're in a sort of a retail echo chamber?
No, because I think, look, we tend to want to buy companies that have sustainable cash flows that are growing, and and that have, you know, a life cycle of momentum. And we like companies that are run by founders, quite frankly. Shopify, Reddit, Palantir, Hood. I mean, these are, you know, Nodo's basically a founder, even though he's not actually the founder. Yeah, I think those names are very exciting and very interesting, and you kind of look at the trajectory of them. The one thing I've been trying to do this year is understand the AI bottleneck trade decisively. And again, I've come across so many companies that are under 5 billion, and I ask myself, like, am I really willing to champion the name? Because I think the other thing in finance media is if you say you bought a name, you know, you're going to have to defend your purchase, and people are going to ask you like why you bought it. If it has bad earnings, you have to defend why the earnings are, you know, you have to, if the thesis breaks, you have to sell out. And like so many of these names, it's easy to defend Reddit. It's easy to defend Shopify. It's easy to defend Microsoft, Meta. And yeah, they're not the crazy alpha that's in there compared to these really small micro cap AI infrastructure names. But those names in July got destroyed. I mean, some of those names were down 80%. And so it's one of those things where it's like, yeah, they're rebounding now if you bought the dip, even though they're still 50% down from all-time highs. So is that an opportunity where you want to go back into researching those really, really tiny names, especially as the build-out has already become as massive as it is? And I think that bottleneck trade has taken a hit, and people have gone into the Shopifys of the world because it's like sustainable. You understand the business. Yeah. And there's a market cap that actually has liquidity, not just like Sharon AI went down like 40% in a day last week.
Yeah, and they're all of these names.
They were the hot Leopold stock that I think just a lot of those names, I'm getting annoyed with caring about them because it's like no one actually wants to hold these. They just want to flip them. And like as a trade, again, that's fine, which is why I have a trading account and an investment account. But as an investment, you can't tell me you're willing to meaningfully hold it and defend it through all the volatility that you know is going to happen because of this bottleneck trade.
You have a trading account and an investing account. Which one's outperforming? Definitely
the investing. Well, the investing account actually has like positions and names that like have done well. But the trading account is fun, dude. Trading account is fun. It is day trading. I know it's a unsexy term, but I get to look at it right here on my 40-inch screen computer, and it's fun. Like, we took some trades on Hood today, took some trades on Micron today, took some trades on Palantir today. Palantir I sold way too early. I bought at 159 and sold at like 159.50. It's at 163. Took a Rocket Lab trade today. Like, this is how I like. What do you say? Get your nut. That's the
yeah, you got to get your nut.
You got to get. I mean, this is
the squirrel comment.
Yeah, this is how you do it.
You're like Steve, man. You're like, yeah, I'm looking at it on my 40-inch screen.
Dude, this screen is the best thing ever. Like, genuinely the best thing ever.
Such a size queen, eh?
Like, it's massive. Bought 159, sold 159.50. So the cool thing about day trading is when you have a sizable amount of shares that you're trading with, you take a small move and then boom, that's your profit, right? And so, yeah, that's been more fun for me. But obviously, the long term, a lot of that profit you take back into the long term portfolio and you buy the shit that you want to hold for the long term, and that's kind of my philosophy on it. But it's more fun than just that was time. But it's more fun than trading your long-term portfolio, because I don't want to trade out of Palantir today that it's up 30%. I want to sit back and be like, yeah, it should be up 30%, and all those dip buys hopefully are just, getting rewarded today.
Yeah. Amit, anything else that you think that the people should hear from you before we see AMD?
Well, I am curious what your audience has beat you up a little bit because you're a big old Lisa Sue bear. I am curious. Do you think these guys will reach $1 trillion tonight? I am curious if you've changed your mind. I know they don't have NVIDIA growth. They've obviously, you've got to admit, whoever bought AMD this year did better than whoever bought NVIDIA. Yeah. So, like, does AMD need to come down, or does NVIDIA need to go up for this equilibrium to take place?
I mean, if it's cyclical, I'd like to lead on the side of just being a little bit more cautious. I don't know. Obviously, I'd like for NVIDIA to come up, but they should be more similar in valuation than people give it credit for in terms of a multiple. One's growing really fast and has really good margins. I'm not anti-AMD. I think that the demand right now is so high that AMD, Cerebras, NVIDIA, Broadcom, they're all going to be selling out at full capacity. So they're all going to be raising guidance and doing extremely well. And that's going to...
So does AMD need to go down, or like, what's your...
I'm not calling... No, absolutely not. Do I think AMD is going to go down? Do I think that they're going to reach $1 trillion? I don't know. That seems like a stretch after another 8 point. I don't think they hit $1 trillion by tomorrow. If they do, great. I just am not rushing in to buy it to get from here to $1 trillion, because I think if there is starting to be pressures, if like Chris is right and the spending starts to slow, it's going to be the companies with very high multiples that get way hurt than the ones that are sitting at 30 PEs. Like, and then
that's a fair point. That's I mean, like, NVIDIA will take a hit during that, but AMD will take we saw this last week. NVIDIA was down, but AMD was down like $100.
Yeah, because it's the more levered play. And there is a difference in performance in the chips. And I think if we do hit a supply-demand equilibrium, the companies that have the better product will end up selling a lot more. And right now you can see it in the pricing, the gross margins, all of these things. Clearly there's a premium being given to NVIDIA products. So that I'm not worried about today. I think that, I could have seen it coming that AMD would have done extremely well, and I absolutely missed it. But I think long-term, I'm still positioned quite well. So I'm absolutely going to be listening to AMD tonight, and I hope they do very well. I'm not anti-AMD. I just, their P is 173 times. Like, it's high.
Someone said, do you see Elon's tweet? It seems like an SEC fine. Are they talking about the $10 trillion tweet?
I saw that tweet. I think there was also one, I think Gali tweeted out that, this company looks extremely cheap. And he said, I think so too, or something like this.
All right. We will see you later today. Thank you, man. Appreciate it. Thank you, guys.
Thank you so much. For the one person out there that doesn't know Amit, this is his YouTube channel. We're sitting here with royalty. I love, actually, dude, we've been here doing this for a long time.
United States, bro. We are good friends.
And you've just done so much better than me. No, honestly though, it's awesome to do this with you, and you're going places, and you deserve every amount of it. So keep doing you, and don't lose that hustle. But I know you have like really good friends and a network around you that is not going to let you lose that hustle. You have it. So
yeah, and look, we're part of the same community, dude. It's not fun to do it alone. So I'm happy that we're all doing this together. And your meetup's coming up. Unfortunately, I won't be able to make it, but I'm really excited for it. So just a good time.
Another time. When are you doing your New York meetup next?
2027. So we're done with meetups for the year. So 27, we'll have.
But are you doing it early, late, good weather?
I don't know. I think we want to do like Miami in the early part of the year because it'll be cold. New York was ridiculous in January.
Yeah.
So probably in the summertime. Yeah.
But you're done for the year.
Done for the year. Yeah.
I think I'll do one a year. Sounds like you might do a little bit less than last time. It was definitely getting busy.
Yeah.
But yeah, meetup. I'll talk with them about that and everything. But thanks for joining me, brother.
All right. Thank you guys. Appreciate it. See you guys in a bit.
See ya. All right. We so he can't so he was expected to come to the event. He's got a family situation, all that stuff. He's going to be having to be down there. I think some people are coming down from India, so his parents want him to spend time with, obviously, I think it's his aunts and uncles, stuff like this. So yeah, he won't be able to come. But the meetup is on August 15th. We have everything already sorted. If you guys, I saw some comments going around that we didn't have a venue or something like this. The venue's completely selected. You guys can go on the Luma link. If you're signed up and you have an account and everything, and you're registered to go, you can see that. Look it up on Google Images or something. It's an amazing spot. Should be great, as well as hotel recommendations if you guys are flying in. If you're Toronto local, then Steven Fiorillo is going to be there. Matt Money's going to be there. Tevis. I feel like I'm missing somebody, but those guys are definitely coming. Link to the meetup. Yeah, I can throw the link in. It's in the comments section as well, but this is the Toronto meetup. Okay. August 15th. Like 2 weeks. All right. I don't think Chris Patel can make it. I don't think he could. Okay, so we're going to be streaming again, or right now for the next maybe 40 minutes or so. And then we'll rotate over with Amit to do the AMD call, where I'll still be streaming, but it'll be a different stream. Where we'll listen to AMD's call, but cover the performance for SpaceX, for Upstart, for really all the names that are going to be reporting. So that should be a lot of fun. That's going to be with Jose and Couch Investor as well, Neil. Zeta as well, yeah. Zeta. All right. Let's see where the markets are at. Dude! Ayo! Look at this. We are first in the draft. Number one, up 3.5%. Palantir is taking me to Valhalla. We also have Microsoft in that list as well. That's doing extremely well. I'm sure SMCI and many of these sort of levered names. Yeah, SMCI is up 10%. That's going to be doing me some favors as well. But big swing here today on the back of my Palantir position and Microsoft position. Not too many big losers. That's another thing. Some people have some great winners, like Chris, for example. He actually has the position that's doing the best right now, Viva, up 37%, but he also has names that are down 36%. So that sort of is really countering his performance. So I think we've got a nice little balance here. And many of these names like SMCI and Lumentum and ASML and Robinhood, for example, still have not run. And I expect those to continue to do well through the rest of the year. So hopefully we can hold the number one spot, but Matt Money's got a pretty good portfolio to do quite well also. Marshall's going to be at the meetup. Yeah, he's going to be there. Be the whole future investing team. Just me and him against the world. Okay, let's see here. By the way, Robinhood, speaking of which, that I picked in my draft, it's only up 2.8%, but they did actually announce that they have secured UK approval to offer crypto services. Okay, so although the UK is not a big percentage of their overall revenue, they do have international revenue, and this is going to add to that. Crypto's not really in vogue right now. People don't care too much about it, but those continuous unlocks open up new streams for them, and that's a great sign. Let's also listen. There was an analyst that was on earlier saying that Palantir is the best technology company. It might be the best company that is publicly traded. What? Let's go ahead and... I have not listened to this yet, so let's have a listen.
Palantir reports the stock is soaring in the after hours. What do you make of those results, Gil?
We are running out of superlatives. Palantir is the best technology company. It might be the best company that's publicly traded. When you say 93%, what we're saying is that their business is almost doubling over last year. This is a 20-something-year-old company that's doubling its revenue and more than doubling its cash flow. So its margins are increasing, and their margins are already the highest of any technology company. So this is remarkable. Alex Karp, confidence is justified. And on top of all that, they exceeded expectations that were already very high.
Palantir reports the stock is soaring in the after hours. What do you...
That's great. Okay. One of the greatest public companies ever. KK says I have to go mow my lawn. Maybe it's not a girl. I mean, girls can mow lawns, I guess. My bad. Didn't mean to be misogynistic. All right. Open Door, Upstart, Toast, Copang, Pinterest, Zeta, SpaceX, and AMD reporting tonight. Who do you guys have the money on? I've got my money on the best performance for tonight. Okay, let's see. Zeta could have a really big pop. And I don't necessarily mean by a beat surprise. I mean like where the stock could go. AMD, obviously, could have a very, very great report. SpaceX, I don't really think so. I mean, obviously they can have a great report, but I don't know if the stock can go up by, 15, 20% just based on a revenue or EPS report. I think people are mainly looking for guidance and to make sure that they're having a product advantage. I don't think that we see that in an earnings report. That's more like a press release that, Starship ended up not only flying out into space, landing, doing some sort of deliverable. Like we need a press release that would actually drive the stock much higher. I think that is a very good sign for SpaceX, not necessarily just the earnings. Not yet. It's too early. Let's see what else is working. Palantir 163. Wild. Air Test Systems, nearly $110 a share. ARM up 18%. Poet up 16.6%. Who's getting worried about these prices? Do you think that this is all too much too soon? Coherent. I'm surprised that Coherent's doing so much better than Lumentum. Well, 14.5% versus 10%, but Lumentum seemingly is the more volatile one, or at least that's the way I've looked at it. Am I still in D-Local? Yes. Yeah. Not sold a share of D-Local. Great company. No, it just showed you how much manipulative selling that we've seen over the past month. That is true. It's not like we're all-time highs across everything right now. We are about to break another new all-time high in the S&P, though. That is an important factor. It's not just AI. There's been a lot of rotating and bringing a lot of money into other industries, but now AI is also moving up. But now we're having a day where software and AI is up. SOXX, for example. So this semi ETF is up 7.3%. Wild day. But IGV, which is the iShares Tech ETF, this is like software, up 4.6%. So both of these are up, where these used to be like opposite trades. You'd bet on the semi names, software would go down, believe that AI is replacing software, and then, oh my gosh, software is oversold, AI is too expensive, they're not replacing anything. The fact that they're both up really does point to, hey, we have just been oversold and things are just looking cheap in general. Honestly, pretty healthy sign. Okay. You are up there with Amit on best finance content around. I appreciate that. Yeah. And I'm not doing streams 1 hour 1 hour a day anymore. We're going to be live much longer these days. Tomorrow, by the way, tomorrow morning, we have Disney, Uber, Shark Ninja, Circle, and my favorite, Shopify tomorrow morning. Many of you guys may not know this, but Shopify is a major position in my portfolio. Like Amit said when he's on, it can be considered very expensive. But I think that the reason why Shopify, almost similarly to like a Walmart or a Costco or something like this, that people give such a premium to Shopify is that the certainty that they'll continue to compound at high rates, improving margins, is extremely high. People are not worried about artificial intelligence replacing them or something like this. They actually think it's likely to improve their business, and stable coins and these sort of things expands them into more global markets. All of this is to likely help their long-term vision. This doesn't happen in a quarter, but quarter by quarter, as we cover this company, it has been getting stronger every single time. I've been around whenever Shopify was not doing trillions of dollars in payment volume, and now we're doing trillions, and soon we're going to do tens of, like, that's how this company progresses. And then what happens to the stock price during that time? Should we stay at the same price as they continue to compound at 30% year over year rates in perpetuity? Who knows? What do you think of his comments on voting for rich people, business owners, and the media attention criticism that he got? Toby Lucky made a comment that I think got really blown up, but I do think, well, I'm going to keep this actually super apolitical. I almost just started jumping into it. I think he made more of a comment that, things like the town halls or whatever are filled with people who can actually afford to be there, which are retirees and these sort of things, voting on what AI is going to be, what's going to happen with artificial intelligence and, data center moratoriums and all of this stuff. And they're not even going to be there or they're not going to be around to experience what the fallout will be if the build out does not happen. So are we getting an honest vote of who is there and who's not, or like who this is affecting and who it isn't? I think it was less of a, only rich people should be able to vote. I don't really think that was the consensus. Okay. Can you comment on SanDisk? I don't have too many comments on SanDisk per se. We'll be covering it, but I don't know it nearly as well as I do Micron. Funny enough, the same CEO of Micron was the founder of SanDisk, if I'm not mistaken, as well as Western Digital. I'm pretty sure that's the case, right, Sanjay? did he found SanDisk? Co-founded SanDisk, and was the CEO from 2011 until the acquisition by Western Digital. Got you. So other way around. Okay. We are going to cover Zeta, not the call. We're not going to listen to the call. As for my take on Micron and memory in general, I am super bullish on memory. I'm aware that these things are cyclical. I just think the build out is larger than what people are giving it credit for. There was here, I'll show you. These types of comments, I heard from a trusted source that Anthropic's ARR as of the middle of July was $80 billion. At this pace, there's a chance that they crack $100 billion by the end of August. Brad Gerstner, who literally knows these numbers, he's not allowed to say them, but he knows them. He's a very, very close investor with Anthropic and OpenAI. Like he knows these companies' performances. But he ended up quote tweeting this, meaning to some level, there might be some truth behind this, or at least that's what I'm seeing from this thing. He said, narrative violation. We've been hearing for 18 months that frontier models are dead. Competition with open source is not zero sum. If you want America's AI to win, you should cheer for both open and closed source models. We need these revenues to pay for the $1 to $2 trillion of annualized capex for American AI. And that's exactly what I believe. I'm cheerleading both open and closed source. What I'm looking for is that AI just continues to compound at the rates that we've seen it for. That is going to lead Micron to higher and higher levels if CapEx can continue to show up. And the percentage of CapEx that is being spent on memory is increasing every single year. I think there are some narratives, there are some missions that people push and they say, this has to come to an end. Or, open sources, it has to beat closed source. It like Anthropic and OpenAI have to die. They have to die because these companies are putting up similar performance at lower costs. Not talking about the, full holistic point of view that maybe an Anthropic or OpenAI are offering individual consumers or small enterprises or something like this. Or the fact that those are not the models that, you're comparing against the watered down version of Fable 5 and you're not thinking about Fable 5.1 or Mythos 2 or whatever the next version of their models that they're working on. And you're being put up against the absolute highest level of the Chinese open source models that we're seeing because they're being distilled off American models. So I think that there's a lot of narratives, job loss, open source that's just going to kill OpenAI, or that OpenAI and Anthropic can't afford to pay their bills or anything like this, that we honestly have not seen evidence to point towards. Everything that I'm seeing is Anthropic continues to increase their sales. A lot of the reports that we've seen come out is showing that their gross margin is much higher than previously anticipated. Some people are actually saying that they're like net income positive. We'll have to see. We don't have guaranteed evidence of this just yet. And that the jobs market's doing, I think, much better than people would have guessed 12 months ago. If that continues to happen, Micron is severely oversold right now. And that's going to lead to great days. And the market, I think, is giving a lot of credit to that right now on the day. But still, we're under $900 a share. And we were under, $800 like a few days ago. And we're $737 a few days ago. Now, we'll see what their earnings are here in the next little bit. But as of their most recent quarter, they are guiding for, or they guided for like 33 billion last quarter and put up 41 billion. Now they're saying 50 billion. Are they going to actually end up showing us $58 billion? Who knows? But if that happens, this is too cheap. Okay. let's see here. I hit my first million today. Congratulations. That's a freaking massive milestone. You know the space that puts you in? Like the rare air of the amount of people who have seen $1 million in their portfolio. And I don't know. I think that's something to really celebrate. So have a drink, eat a steak, celebrate that milestone. Don't let it pass you by. And don't share. Weirdos in chat, you deserve it. Okay. Do you think hyperscalers are a bit overbought now? 20 to 30% upswings in 2 to 3 days doesn't seem super healthy. Well, I think this is... I don't know if that's the proper way to value if companies are overbought or not. Maybe it is. But, you know, whenever you're looking at a company like, well, Tesla's not a great example. Microsoft, overbought, 27 PE. It's got a lower PE than the S&P 500. You know, growing way faster. Going to be free cash flow positive the entire year. Google, 19 times PE. Well, some of that is a little bit juiced because of their SpaceX position. But I think forward PE, it's something like 26 times or something. Like these are not high valuations. Overbought, fair value, maybe. But if something's fair value and growing at 30%, then what? It's going to compound at 30% if it stays at that multiple? I can take that. Okay. Sudden windfall of cash is a great feeling. Do you trade on here live? No. No, I'm not a trader. I buy companies and hold them long, and we follow the narratives and follow the stories and all of these things. You guys are free to trade on the news that we end up covering here. Well, I mean, of course, but like, I would not consider myself a trader. People sometimes wonder how, how I can stream for 4 hours and just sit here and follow the news. But, I don't know. I hold for the long term. And, yeah. Okay. Ooh, this is the Elon tweet. SpaceX shorting ahead of earnings. 95% of SpaceX stock available to borrow is out on loan, amounting to 34% short interest as a percentage of the float. Elon Musk said, I try to warn them, but they just keep doubling down. And he did one of these emojis. Uh-oh. Okay. NVIDIA up 3%, hit another new intraday high today. 213, we're back down to 212.85. Palantir up 30% right now. Let's see what's not working. Better Homes. Wasn't this the one that, who was the guy that said that this company was going to like 300x? That was sitting outside of Drake's house. Eric Jackson? Is that it? I think that was it, right? This is the dude that said this company was going to like 300x. Okay. Amazon is down today. Jeff Bezos was selling. I think he sold like $4 billion worth of stock. He hasn't done that in a bit. Look at this too. Oh my gosh. This is a crazy weird story. If you have a BMW, supposedly newer than after 2020, you got advertisements in your own car about SpaceX or about Spider-Man. Oh my gosh. I'm SpaceX pilled. How wild is this? You buy a premium brand to then get ads in your car. Wild. That's a joke? It's not a joke. There's a bunch of people talking about it. Like a bunch. Jensen Huang also previewed the new Alpamayo 2 Super, our frontier open reasoning model for autonomous vehicles that has been showing up extremely well across benchmarks. Now, I ended up quote tweeting this, and I said, honest question for the Tesla bulls. I'm not anti. And some people get so offended whenever you ask a question. It's ridiculous. But I just said, it seems obvious to me that self-driving will become a solved problem. Driving is not getting harder. Like, this is the thing that I don't understand. There will be a cap to this service, no? Like, Teslas won't be able to drive faster than the speed limit. Right now, obviously, they have a technology advantage, but will that always be the case? Or will they continue to improve as driving is not a solved problem just yet, but it will eventually be a solved problem? That's my understanding as models get better and the problem of driving does not. How can you continue to charge $99 a month if, you know, models, which is really going to be the brain of the organization that taps into the cameras and the LiDAR and all of these things, continue to improve month in and month out? Tanner, it's not easy to equip every car with 10 cameras. Yes, it is. Every car company is doing it. If GM and Hyundai and all of these things, like you're telling me the multi-$100 billion organizations don't know how to plug in 10 cameras, that is not the problem. I'm not talking about doing it retroactively to every car. I'm saying that the new, more expensive vehicles, maybe it's on a, you know, six-figure vehicle. Can those cars, will they eventually be able to full self-drive, and will they end up charging $100 a month? Hondas are far more reliable. You're missing the story. Am I saying Hyundai wrong? Hyundai, whatever. It's a Japanese car company. Am I crazy? Everyone's like, that's the funniest thing I've ever heard. Hyundai. Korean. All right. Well, now I'm racist. So now I can't pronounce things, and I just got caught being racist. And all right. Good time to sign off, I guess. I'm taking so many L's right now. All right. But for real though, can we get back to the problem that I was talking about with Tesla? Not potato. They're different. They're different. Dude, stop. I'm actually getting like clipped right now. Focus on the issue. Okay? Hyundai, a very proud Korean brand that I love, and they don't make terrible cars. Will they be able to self-drive? Ads are kicking in. I will start playing ads. You guys better straighten up. I'll put 3 minutes worth of ads on this video right now. Straighten up. Okay. We also saw that CoreWeave is expanding their footprint into Indonesia. I'm kidding, Indonesia. But this is another great ad for them. CoreWeave will add 3 new data centers totaling 360 megawatts of contracted IT power, expected to come online in 2028. It's wild how far that they're presenting these data centers that are going to come on in years. You know, as if you look to companies like SpaceX or even Meta that can announce multi-billion dollar data center agreements, the reason is because they have the chips today. Like, you don't have to wait till 2028 for these to start be revenue producing. And that's sort of the problem with the Neoclouds, which I still love these businesses. They're like, they've made investments back in 2023 that are now coming online today. And those are going to be making a ton of revenue. So I've got no problem with how they're doing right now. But if you were to point to a problem, is that they have to spend today for revenue that's going to come way down the line. And they want to ramp to what they see the demand to be. So they need to spend a boatload today, and they're not making nearly as much revenue. Forget Neoclouds. You said hi on. Okay, I'm playing ads. I swear, you better have YouTube Premium. For real, all of you need to say sorry right now, or you're getting hit with ads. I want to see a flurry of sorries in all languages, Japanese and Korean. Oh my God, Tanner's #1 in stock. Don't act too surprised. We're doing fine. Hit them. All the people that are going, you can't hurt me, blah, 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 are all on YouTube Premium. That's so funny. Oh, we will be covering AMD. Yep. We've got another stream at 3:45. It's pay to win here. For real though, and I'm not going to play ads unless you guys make me angry. And that'll be one way I'm going to hold you guys down here. But what's it called? YouTube Premium is the greatest subscription. Go Google, long Google on that. But I would give up Disney Plus, Netflix, every single one. But whenever I have to use someone else's account and it plays a 5-second ad before my video, or God forbid, a 1-minute ad before my video, I could flip my desk. I've gotten so used to never seeing an ad. Drives me nuts. Okay. What does YouTube Premium give you in addition to no ads? I don't know. Okay. Did you guys realize I never saw a single answer to my Tesla question at all? I said Hyundai one time. That's the way I've been saying it. I think my girlfriend says it, or my fiance says it that way. I think that's just how I don't know. Maybe I married into a dumb family. Sometimes I forget, like, I got like 4,000 people watching, and like one of them's their fan. No, they're absolutely great. I love my family-in-law. No way she's from Portugal. How do you know my girlfriend's from Portugal? Did I say that already? I am dead, yeah. Okay, this is on video and it's being recorded forever. Hopefully they got a sense of humor. Oh, well. Ladies and gentlemen, it has been a beautiful day. The S&P 500 is climbing once again to all-time highs, 7,700, almost 7,750 on the S&P 500. What a genius day. NASDAQ 100 also doing well. As you guys know, a big percentage of my portfolio is heavily invested in the semi-trade, artificial intelligence names, and some software names, but also the software names that have to do very closely with AI, like Palantir, Microsoft, these sort of names that might fall into the sector of IGV. So to that respect, it's been a great day. There'll be red days again, and hopefully you guys are still in good spirits there, and you're not cursing out my family name whenever stocks go down 2% from their all-time highs, or the S&P goes down 2% from its all-time high. But oh well, cherish it, get some steps in. Money, health, or get your finances up, get your relationship status up, get your health status up. Those are the three things to worry about in life. Love you guys. Bye for now.